The European Union has lowered its economic growth forecast for the Eurozone. It said rising global trade tensions, especially those involving the United States and China, were likely to slow the region's recovery. The European Commission said it now expects the 20 countries using the euro to grow by 1.2% in 2026, down from an earlier forecast of 1.4%. The bloc has slightly upgraded its estimate for 2025, predicting 1.3% growth thanks to a better than expected performance this year. The EU has warned that new U.S. trade policies and possible reactions from major countries like China will weaken global trade. The EU's economy, which is strongly dependent on exports, is especially vulnerable to uncertainty and restrictions. However, a trade deal struck with the U.S. in July could ease some risks. Under the agreement, EU exports to the U.S. now face a 15% tariff instead of the threatened 30%, which could have seriously damaged Europe's economy. Some major economies received mixed updates. Germany, the EU's largest economy, is now expected to grow 0.2% in 2025 and 1.2% in 2026, helped by increased public spending. France is expected to grow 0.7% this year and 0.9% in 2026, but its outlook for next year was cut due to domestic uncertainty. The report indicated some good news for consumers. Eurozone inflation is projected to fall to 2.1% in 2025, close to the European Central Bank's 2% target, and drop to 1.9% in 2026. Experts say lower inflation should help rebuild consumers' purchasing power after years of high prices.